Does it feel like no matter how perfect you are as a driver, your car insurance continues to increase every single year? It doesn't seem to matter whether you drive 100 miles an hour or are driving extremely slow in the slow lane. No matter how you drive, the increases continue every single year. And what gives with these increases? In 2021, for full coverage insurance, it cost a little over $1,600. Now, let's see how that's been increasing over time. In 2024, that average is now $2,500 and some change. So look at that. That's a 52% increase in only 3 years. In the 1 year from 23 to 24, there was a 26% increase. And these are the most expensive states that are feeling it the most. Georgia, Delaware, California, Colorado, and then the behemoth of Florida. Look at that. The average is $2,500. Florida is almost $4,000. Ouch. There is hope. And in this video, I'm going to go over 10 tips to help lower your auto insurance starting right this second. Hi everybody, I am Max. I have been a licensed insurance broker since 2014. Wow, 10 years, time flies. I'm here to share with you the good, the bad, and the absolute ugly part of the insurance industry. The only way you can really become proficient in insurance is by doing it each and every single day. So I'm sharing with you how to save money, how to have adequate coverage, and definitely how to avoid these gigantic auto rate increases. So without further ado, let's dive in. All right, number one is a very simple shopping around. 26% of people have never compared multiple quotes. And of those people who end up comparing quotes, 76% of them end up saving money. There are really only two approaches to shopping your insurance around. Number one is called the DIY approach. Very simply put, it's a do-it-yourself method. So you're going to go to your favorite search engine and type in auto insurance companies in whichever state you're in. You can then go to their website and type in your information over and over and over again. Some may give you a quote immediately, some may have someone reach out to you via email or phone, and some will require further information. And the benefit of this is you get to have your phone number and email sent to a lot of marketing departments, which means you're going to have lots of phone calls and emails from places that you probably don't care to hear from. Do-it-yourself method, definitely not recommended. The second approach is the utilize a professional approach, which is in the insurance called an independent agent. Independent agents are just that. They do not have exclusivity with any one insurance company, which means they can go to 3, 4, 5, maybe up to half a dozen or even a dozen different companies to find the company that's going to be best for your situation. What's great about this is you give your information one time, the agent does then all the heavy lifting to find the best deal for you. Reaching out to a few in your area is very, very beneficial. Again, you may only have to give the information out once or twice, and the independent agents do all the rest of the work. I'm curious though, on your auto insurance, how much has it increased in the past year? I know for me, certainly it went up for about 25%, and guess what? 0 accidents, 0 speeding tickets. That's just the way it goes, I guess. All right, step number 2 is to enroll in Telematics. Now, what the hey is Telematics? It's simply a device that plugs into your OBD2 sensor, which is, long story short, under your dash, and it's going to take information from your driving habits. Sometimes they also use a smartphone app too, so it depends on the company. And what they track is your driving habits, so how fast you brake, how fast you accelerate, the time of day that you're driving. Later is obviously worse because that's when most accidents happen. How many miles you're driving, how many miles you have driven, where you've gone, and then lastly, where the car is parked each and every single night. If you're a safe driver and quite defensive, this may be for you. My driving habits changed so much since 2020 that I remember 1 month I drove 200 miles. That's not very much for a whole month. Which goes into number 3, which is enroll in a pay-per-mile policy. Again, my habits changed so drastically after 2020 that 200 miles each month is very, very little, and most insurance companies are rating you for between 12 and 15,000 miles a year. So if you're driving less, this may be your option. I saved at least 25% because the reality is I present so much of a less risk to the insurance companies. All right, number 4 is, again, 2020, lots of people moved. Check your driver's license. If you moved to a different state recently and you have not changed your driver's license, that is going to bite you. First off, you're supposed to change it usually between 30 and 60 days when you enter the state, so you may be doing something illegal first off. And then secondly, the insurance company, pretty much every insurance company does this, is they charge a out-of-state surcharge for those who do not have a in-state driver's license. I've seen that surcharge to be as little as 15% and as much as 50%. So again, if you've moved and have not changed or given the information to the insurance company, make sure to call them and give them the information. Number 5 is ensure the insurance company has the correct yearly mileage for your vehicle. If you're maybe leery about privacy and putting a telematics device in your car, make sure that your insurance company has the correct mileage. Since 2020, my driving habits went from 15,000 yearly miles to about 2,000 to 3,000. That significant change in mileage means there's going to be a reduction in rate as well. So if your habits have changed, or if they haven't, just see what your insurance company has for your annual mileage. I can pretty much assure you it's likely going to be higher than what you're actually driving. Example, if they say you are docked down for 12,000 yearly miles, but you really only drive 5,000 a year, they're not going to take your word for it. They're going to need some documentation. So the next time you go for your oil change or service, make sure to keep the paperwork and use that as supporting documentation to show the insurance company that you indeed only drive 5,000 miles a year. Number 6 is remove comprehensive and collision coverage. Before you do this, handle with care. Whenever you are removing coverages, you want to make sure that you understand the pros and cons to that. With older vehicles, typically 10 years older or even older, you may consider removing your comprehensive and collision coverage. So you might be thinking, what is comprehensive and collision coverage? Well, I'm glad you asked. Collision is exactly as it sounds. It is when your car collides with anything. Another car, a concrete wall, a stoplight, a curb, a person, a reptile, no matter what it is, it's when your car collides with something. Comprehensive, or it's called other than collision, is pretty much everything else. A hailstorm, a tree falling, rock chip on the windshield, a smashed window for someone burglaring, something of that nature. Anything other than your car physically colliding with something, another object. So you think to yourself, what are the pros and cons to comprehensive and collision? Well, let's go over those. Let's say you have a 10-year-old vehicle, and the value is $10,000. Comprehensive and collision cost yearly is $1,000. So you think to yourself, is it worth it? And the question is, in 5 years, if you keep both those coverages, that's $5,000 in total, you just bought half of the car that you have currently. And with depreciation, it'll be even more than that. So the question you ask yourself is, what if you never even use the insurance in those 5 years? Yes, it's a peace of mind thing. However, there's also a financial element to it. You could have saved that $5,000 and put it towards your next car, or simply self-insuring, so if a bumper is beat up or you actually collide with something, you have that money in your pocket to spend on that. So again, this is something that you may consider doing for cars that have a less value and 10 years old approximately or older. So remember, when you take off comprehensive or collision, you have zero coverage for the actual physical parts of your vehicle. Yes, there's still going to be liability and other things of that nature on your coverage, but again, you are 100% responsible at that point for the physicality of your vehicle. All right, number 7 is to bundle your policies. Very simply put, carriers love when policies are all with them. And whether you have a home, auto, business, life insurance, all of these policies, if they're with the same company, you could see between a 10 and 20% savings on each individual policy. So again, very, very smart to see if you can bundle those and save a pretty good chunk of change. Number 8, and this one people aren't going to like, but ditch the new car for something used and beat up. Yes, I understand you like your newer car with all the creature comforts and the screens and all that, but here's the thing. Most of insurance is tied to the value of the car. So is instead of having a late model luxurious car and trading down to a 10-year-old car and removing comprehensive and collision, is that a financial, feasible, and enjoyable move for you? That's going to be 100% up to you. Number 9, if you are in a long-term relationship and you and your partner have separate auto insurance policies, you may consider combining them. This also applies for anyone who lives with you. So if you have your brother, sister, someone who is your blood relative as your family who lives with you, you may consider combining policies with them as well. This will activate a multi-car and multi-driver discount. And simply put, combining those two things may be a savings. It may not. It's always good to check. And second off is, if you're unsure about the record or driving habits of the other person, a lot of times it's better safe than sorry and to have your own policies. But again, this could be a very good thing for those who are cohabitating together. Last but not least, number 10 is make sure that the insurance company knows about your driving record. The good part. Whenever you are with a at-fault accident or a chargeable incident, which could mean a speeding ticket, red light ticket, things of that nature, they always go on your permanent record. It's a joke. Obviously, it's not permanent, but it goes on your driving record. And then those obviously affect your auto insurance rates. So if you've had a chargeable citation or accident, the good news is it goes away eventually. Most states are between 3 and 5 years. However, the insurance company doesn't always reflect that in the rate. Spoiler, you have to advocate for yourself. Insurance companies are never going to give you a refund, rebate, coupon. They're always going to charge the most as possible. I know. Crazy, right? So example, if you're in a state with a 3-year rule, which means after 3 years, the violation is removed and dropped, and for some reason, you believe that that may still be there, and even if you don't, you want to make sure that you reach out to the insurance company and ask, hey, I had an accident 3 years ago. That was obviously more than 3 years ago at this point. Can you ensure that that's not on my MVR, which is motor vehicle record? The answer a lot of times is, oh, by the way, we're going to take that off now, and your rate has now decreased. Again, advocate for yourself. No one's going to do it for you. Bonus, how about that? Number 11, has your credit score increased? Many states allow their insurance companies to charge you based upon your credit score. So if you've been steadily increasing your credit score over the last several years, same situation, just like the chargeable accident that can fall off, make sure your insurance company has your updated credit report and credit score. And then bonus number 2 is to look at your renewal each time you receive it. No one's going to advocate better than yourself for you, and that's the truth. Make sure there's nothing out of the ordinary. If there's a big increase, ask why. Again, advocating for yourself here is the only way you're going to make sure that no one is taking advantage of you. If things look odd or out of whack, or you just haven't had multiple quotes recently, ask your broker, again, no DIY method, ask your broker to run multiple quotes just to make sure that everything is in line. Auto insurance seems to only be going only one way each and every single year, but the reality is with these tips, I bet you're going to be able to see some savings. I will catch you guys in the next one and have a magnificent rest of your day. Bye for now.